Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Wednesday, Hump Day, and the March 14th, and we do got really not much a whole lot today. Again, the rest of this week we do got more economic news. We had kind of the big day yesterday with the Fed statements and retail sales and such. So we'll kind of just jump right into headline news. Right now, the market's a little on the uh, mixed results right now, and right now, reason for part of the positive news is that a lot of investors are relieved to see that a lot of the banks had positive stress tests. There were a few that didn't make the cut yet, but for the most part, a lot of them did. So that was kind of the good news. Uh, as for this Fed statement yesterday, he didn't really say anything. I think that was a surprise. The main thing that some investors probably weren't too happy with was there was no mention for quantitative easing three, a QE3. So it's kind of like, you know, as a friend of mine kind of termed, it's kind of equated it almost like people trying to get their crack basically. So it's kind of a funny analogy, but it's kind of the same. Government want to throw money, and they love to see more money thrown at it, and but there may not be need for it. Right now, we're still seeing some economic news, see some improvements in the economy, and they may not need to put that extra money in there and boost it. So, if we're still continuing that trend, why mess with it? So we've already put tons of money in there, and hopefully get people to work. We'll probably have very slow growth, but we'll probably have a little bit of growth over this year and maybe kick in the next couple of years. So, but I think you're probably seeing some changes in the markets with that as well. So we'll just jump over, in this case, over to the bond market, see how things are at. And as you can see, we're having actually a pretty big sell-off right now with all these reds. We've probably dropped about 100 basis points over the last week, over this week even, with all the red. As you can see, the candlesticks going downwards and the lower point of the bond market. So right now we're touching at 102.41. Last correction we had was probably right around 102.60. So hopefully it doesn't remain that way. It will maybe close some of those gaps that we had to the worst thing. It's possible it could close some of those, but right now we're kind of going through a sell-off right now, kind of a correction, so to speak. So this is natural progression. We're going through a progression where we're having a sell-off right now in the bond market, and as a result, interest rates are going up. So they did jump up a little bit as a result from the pretty big drops we've had over the last week or so. All right, folks. So you guys have a wonderful day. And sorry, not a whole lot of news for today, but we will have some more tomorrow as we'll have the weekly jobless claims and such. So if you guys are at Mike's Daily Market Report, please subscribe or stop on by and get your free daily updates. Have a wonderful day.